I'm Charlotte McLeod with investingnews.com, and here today with me is Edward Sterck, Director of Research at the World Platinum Investment Council. Thank you so much for joining me. Great to have you on again.
Oh, thank you for the invitation. It's good to take part.
Great to have you here. And we do have a lot to talk about today because the WPIC just released its latest Platinum Quarterly Report. So it does include an updated 2023 deficit projection. It's not a whole lot higher than it was the last time we talked, but it is a little bit higher. And what I was hoping you could do is start by reminding us about the supply-demand dynamics behind that deficit for this year.
Yeah, thank you. We've got a deficit of just shy of 1.1 million ounces projected for this year. As you said, it's a little bit deeper than the one we spoke about back in September, but broadly, there's some changes to the underlying numbers, but there's nothing, there's no major surprises, if you like. I think the key point for this year is that it's very much a demand-led deficit. So total demand is up 26% year on year, and that's led by 14% increases for both platinum, automotive demand for platinum and industrial demand for platinum. Jewelry demand is more or less flat year on year, and so the remainder of the increase comes from positive investment flows, which come after 2 years of net disinvestment. So, strong demand-led deficit, but it's also worth noting that whilst it is mainly a demand story, there are some things that are worth touching on the supply side as well. So supply is constrained. Mine supply and recycling supply are both down around 9% versus long-run sort of output rates. They are pretty much flat year on year versus 2022, but 2022 was a year where we saw the supply was constrained. We're expecting it to be constrained this year, and we'll get on to talk about 2024, but a lot of these trends continue through to next year as well. Why is mine supply constrained? Well, a couple of things really. Firstly, we had some planned maintenance this year, and then also the electricity shortages in South Africa created some operational headwinds for the producers there. And that was mainly a first half story, so a lot of that's come through now. In terms of recycling supply, there are some interesting things that have happened there this year. So we've continually downgraded our recycling supply estimates each course that we've put our numbers at. And I think there are a couple of reasons behind that. So firstly, there's an alleged offence that's occurred in the US that came to light in around this time last year, actually, when the FBI raided an aggregator of spent catalytic converters and arrested a bunch of people, and effectively have accused them of dealing in more than $500 million of stolen auto cats. Now they're aggregating that material and selling it on to the recyclers, who've become, effectively concerned that they don't want to be complicit in this, so they've got to have complete clarity and visibility on the origin of the catalytic converters they're recycling. So, working through how they do that has impacted their recycling rates this year. On the other hand, globally, we're also seeing just generally a shortage of end-of-life vehicles. That's holding back recycling supply. Now that's kind of difficult to unpack because we've got increasing new vehicle production and sales, but at the same time, people are running existing vehicles for longer. So I think there's a couple of things at play here. Firstly, new vehicle production is going up. It's a bit of a bounce back from the underproduction we saw through COVID and as a result of the semiconductor shortage. But at the same time, there are economic pressures on consumers that effectively are forcing them to run existing vehicles for longer if they can't purchase a new vehicle. And there are some lifestyle changes as well. So post-COVID, people are driving less. Miles driven is down 7% in the US versus pre-COVID, and people are working from home more. So existing vehicles are effectively lasting longer.
Okay, I think that gives us a pretty good grasp on current supply and demand dynamics for platinum. And there's a few points that I'll go back and have some follow-up questions on. But before we do that, I want to look at 2024 as well, because the WPIC is now looking ahead to next year. And there's another platinum deficit forecast for that period. I think about 350,000 ounces versus the over 1 million for 2023. So less, but still quite high, it looks like. So I wondered if you could talk a little bit about how the market is going to proceed into next year to create that smaller but still sizable deficit?
Yeah, so I think quite a few of the trends that we're seeing this year are flowing through to next year. So we're expecting wine supply to be up 2% year on year, so broadly flat really, and that's just to set a lot of the operational challenges that are being experienced this year are continuing to next year. There is some further scheduled maintenance as well, which does have an impact, but and there are some challenges in terms of cost pressures as well, because we're seeing the price of palladium and rhodium have come down quite substantially over the course of this year, and that's just creating some challenges at the top end of the cost curve for the producers. In terms of recycling supply, we have a 7% recovery in our numbers for next year, and that's just assuming that some of these challenges that the recycling industry is facing this year begin to ease. So we're assuming that there will be an increase in the availability of end-of-life vehicles, for example, and those proof of origin and provenance challenges in North America are kind of worked through as well. But in terms of demand, we've actually got growth in demand from the automotive and jewelry sectors. So automotive demand is up on a continuation of platinum for palladium substitution in gasoline vehicles. It's also increased a little bit due to tighter emission standards. But then there's also a bit of a demand increase that's associated with the drivetrain mix. So effectively, we're expecting an increase in hybrid vehicle production. So those are internal combustion engine vehicles that are either plug-in hybrids, or they are what we term mild hybrids that harvest some of the energy that's expended in decelerating a vehicle, and then return it to the drivetrain when you're accelerating and need that little bit of extra oomph, and that helps effectively reduce emissions and reduce your fuel consumption. Now, hybrid vehicles, because they're turning the internal combustion engine on and off quite frequently, they're operating at a lower temperature than a straight internal combustion engine vehicle. And at lower temperatures, the exhaust treatment system is less efficient effectively. So you have to have 10 to 15% higher PGM loadings in order to make sure that those vehicles are compliant with the emission limits. In terms of the rest of the demand picture, industrial demand is expected to be down 11% year on year. Now, one of the things I neglected to mention before is that 2023 is expected to be a record year for industrial demand. So whilst it's quite a big step down for next year, actually we're still expecting industrial demand in 2024 to be the third highest on record. So actually still pretty strong. And then investment demand is still expected to be positive, but just down quite significantly from the investment demand that we're projecting for this year. So all in all, that results in the smaller deficit, and it is still a material deficit, but it is smaller than the record one this year. And so 2 years of consecutive deficits is something that we think should be quite interesting from an investment perspective.
Yeah, it does sound really interesting. And I know the WPIC just released its 2024 outlook, but I wondered if you've started to look beyond 2024 at all. Just curious about if we'll see that deficit continue to balance out, or if it may stay at kind of elevated levels moving forward.
So it's a good question. So what we're in our quarterly, we tend to only look 1 year ahead. So 2024 is the 1 year ahead outlook now in effect, even though we're still reporting on 2023. And those numbers are generated for us on an independent third-party basis by a group called Metal Focus, who do the same for some of the other organisations as well. But we do our own research for years 2 to 5. So we do have projections that we've published out to 2027. And I think it'd be fair to say that a lot of the features that we see contributing to the deficits this year and in 2024 are likely to continue. So, I mean, just picking a couple of areas of demand here, automotive demand, as things stand at the moment, and if platinum continues to trade at a price discount to palladium, we think that substitution is going to continue to occur in gasoline vehicles. Additionally, tighter emission standards mean overall higher loadings per vehicle, and we think the drivetrain is going to continue to go down the route towards increasing hybridization. It just makes sense from a manufacturing capacity perspective when you're setting up new manufacturing lines. If you're going to do it for one geography, you might as well kind of do it for all of them, really. And then in terms of industrial demand, a lot of platinum's uses in industrial applications are as a catalyst. And those catalysts are important for effectively increasing productivity and reducing energy requirements, and therefore actually reducing emissions. And obviously that's a really, really important benefit to the world at present. So we see those end use for platinum being sustained really, even if we do have a very difficult economic outlook for the next couple of years. Glass manufacturing is also another key industrial use of platinum, and a lot of that is the fiberglass or glass fiber markets, where the product from the glass fiber product is going into things like wind turbine blades and lightweighting of vehicles to improve efficiencies, particularly important in battery electric vehicles as automakers try to compensate for the weight of the battery. And then just sort of looking at the wind market, installed wind generating capacity is expected to double between this year and 2030. So we can see that, therefore, that there's likely to be quite significant demand for fiberglass going forwards, and obviously that translates into continued growth and demand for platinum as well. So a lot of these things kind of are likely to continue. And added to this, we've got the hydrogen economy, which is very small today, but growing quite quickly. And if we think about the subsidies that are available for green hydrogen, they've gone from around $50 billion in 2021 to almost $300 billion today. So, just 2 years, that's quite a significant change. So we're confident that the outlook for the hydrogen economy is one of continued growth. In fact, actually, the IEA just a few weeks ago put out their latest estimates of planned hydrogen electrolyzer installations, and that's up, I think it's about 70% year on year from what was planned as of October 2022. So there's definitely strong momentum there. It's coming later in the decade, predominantly, but definitely there's a lot of sort of future demand growth potential for hydrogen for platinum.
All right. And if we look a little bit more closely at some of these supply demand dynamics, I wanted to touch on industrial demand. So you mentioned 2023, highest level ever, and I think 2024, third highest level. So that's quite strong. And that's interesting to me because when I'm hearing about other commodities and industrial demand, there's a lot of concern about recession. Is this going to impact demand? And it looks like platinum is kind of bucking that trend. So what is going on there?
It's a good question, and it's one that I think we kind of have to answer really. So, one of the big differences in platinum versus other commodities is, for the most part, with the exception of a couple of industrial end uses, it's not actually consumed. So the platinum catalysts are ultimately recycled. You get a little bit of losses during the manufacturing process of whatever it is you're producing. But the ongoing demand on a year-to-year basis is really just topping up for any small losses that occur during the manufacturing process. The big demand pull for industrial applications is on new capacity additions. So when a new glass fiber manufacturing facility is being built, or a new oil refinery, then you populate that facility with platinum, and that's the big demand pull in any given year. Now, as I said, I think the outlook for glass, for example, is one where we've got quite significant demand growth expected in wind power for the next little while, and that will translate through ultimately into new facilities being built and new platinum demand coming through. And we think that the likelihood is, even if we see an economic slowdown coming, which is quite likely, that'll be followed up with stimulus packages from various governments around the world. And as things stand at the moment, we think a lot of those stimulus packages are going to be oriented more towards the energy transition. And ultimately, most of those sort of energy transition applications tend to be fairly positive for platinum demand. So it is kind of bucking the trend. There are certainly risks. We can't, we kind of have to highlight that. But we think that it's just in a better position, as you said, than a lot of other commodities.
Okay, and the other demand side element I wanted to touch on was automotive demand, which I believe you mentioned was pretty strong in 2023. So last time we talked about the buying habits, I guess, of car makers. And I think you mentioned, if I'm understanding correctly, they buy on contracts. And in previous years, that led to some inventory buildup. So I wanted to check in on that. How is that looking right now?
Yeah, so I mean, obviously as a result of COVID and the semiconductor shortage, the automakers effectively underproduced vehicles versus what they might have planned their output to be without those challenges. It's pretty difficult to kind of estimate those numbers, but roughly we think it's about 33 million light duty vehicles that weren't produced that they'd been planning to produce, and yet they continue to take delivery of their PGM, their previously agreed PGM purchases under their take or pay offtake agreements and running down their forward books and so on. So we think what's happened this year is we've got this record deficit. It hasn't really translated into a price response as yet. And we think the reason for that is the automakers have modified their purchasing plans this year just to reduce those excess PGM inventories. In platinum terms, it's rough numbers, probably around 1 million ounces. And so it's just taken the heat out of the market that would otherwise have been extremely tight. We think that process has largely run its course now. It's very hard to say with a high degree of certainty. We think it has. And so as we're looking through the rest of this year, what's left of this and into 2024, then we would begin to expect the underlying market dynamics of 2 years of fairly significant deficits begin to translate into begin to be reflected in the market price.
Yeah, I wonder if there's more that you can say on the price there. So it sounds like maybe that's possibly the key to a price increase. I know we also talked previously about how platinum's been stuck in kind of that 900 to 1100 range since mid 2021 or so.
Yes, I mean, look, we're still in that range. So nothing much has happened as yet. But if you think about any, I mean, we don't give price forecasts just because of the nature of the organisation that we are. But if you think about any commodity that's in a deficit, you can't really have a deficit in the commodity markets. So that you either get a price increase until you begin to get demand being priced out of the market, or you begin to get a supply response. Platinum supply is, we think, very price inelastic. It takes a long time to build new operations. Have a high degree of certainty in the operating environment that those operations are in, and those things just take you can't have a quick response to any kind of near-term shortfall in the market. Added to which, of course, platinum isn't produced on its own; it's produced alongside all of the other PGMs and some base metals as well. So when thinking about the economics of a mine, you have to take into account what's happened with those other commodities as well. We've seen quite significant decreases in the price of palladium and rhodium over the course of this year, and obviously that has a bearing on future production plans for platinum as well. In terms of what might happen at this point, we think, as I said, that the market should begin to reflect those underlying dynamics. There's still a lot of uncertainty on the exact timing of that.
Yeah, and maybe we can touch a little bit more on the mine supply angle, because I think that's very interesting too. So I know the report mentions it's really not back to those pre-COVID levels yet, and there's actually downside risks into the future. So maybe we could talk a little bit more about that. I think it's particularly interesting how you started to mention, what the companies are doing to make adjustments based on the prices of the other metals.
Yeah, so I mean, if we look at what's been announced, I mean, Sibanye-Stillwater, for example, has announced that they are looking to start the process of potentially closing 4 operations. 2 of them were pretty much mined out anyway, and then the other 2, I think, is on probably economic grounds. We haven't seen any further announcements from any of the other major producers as yet, beyond some public statements saying that there are challenges that they are facing as a result of the fall in the palladium and rhodium prices. So to give some context to how significant those falls have been, the basket price, which is a kind of aggregate of all of the PGMs, gold plus the base metals, is down 40% year to date in US dollar terms, which is quite a significant reduction. In rand terms, it's a little bit less severe. It's about 33%, still quite a lot. So look, I mean, I think they definitely do have, they are putting their thinking caps on, trying to get a feeling for what they expect pricing to do over the next little while, and that'll feed into their future production plans.
All right. And the other mine supply angle that I wanted to touch on is, okay, so we have South Africa as the biggest producer of platinum. They have their challenges such as electricity and other things that are going on. We have Russia, though, as second biggest producer. And one thing I don't think we've spoken about before is they still have their war going on with Ukraine. I wonder if that has impacted maybe not production, but perhaps if their metal is getting to the market, if people still want to do business with them in that way.
So I think the reality is that even if we wanted to completely exclude Russian origin platinum and palladium from the global markets, we just can't really, and there's just not enough alternative supply to replace the output that comes from Russia. So just to give you some context as to the scale of Russian output, it's about 11% of global platinum supply, but it's over 40% of global palladium supply. So given that there's an element of interchangeability between platinum and palladium, particularly in automotive applications, obviously what happens in the palladium market has a really significant bearing on platinum and to a lesser extent vice versa. So, we think that Russian material is still coming to market. It's no longer good delivery for the bullion market in London. But if you're an industrial or automotive end user of platinum, good delivery status doesn't really matter. I think probably one of the bigger challenges is, given the sanctions on the Russian financial system, is necessarily how, as a consumer, you might pay for that Russian origin material. It's probably a little bit more challenging to navigate. But ultimately, we think the material is still finding its way to market. I mean, China has not obviously put in place the same sanctions that the West has against Russia, and China is the biggest platinum market and the biggest palladium market globally. So, for them, it's a simple sort of solution for Russian origin material in terms of finding an alternative end customer.
Yeah, thanks for going over that. I know that's kind of the theme for a lot of commodities and not just platinum. So that was good to go over. I have one last point that I wanted to ask you about on the demand side, and that's the investment demand angle. So it looks like it's set for improvement in 2023, then a pullback in 2024. So I just wondered if you can look at the dynamics of what's going on in that case.
Yeah, so it's a combination of things. So you can kind of divide investment demand into two broad categories. So there's borrow coin demand, more retail oriented, and then there's the physically backed ETF demand, which is typically a bit more oriented towards institutional investors. So in terms of borrow coin demand, this year's it started off really quite strongly, it then weakened a bit through the middle of the year, and we're seeing a bit of a pickup again now. Looking into next year, we are expecting borrow coin demand to be a little bit lower. And that's just reflecting, frankly, just slightly weaker economic environment and reduced consumer disposable income. So just there's less money going around for people to apply to all sorts of investments, including platinum. On the institutional side, and sort of pivoting to the ETFs, we've got a higher for longer interest rate expectation now. And so, given that precious metal ETFs, be they a gold ETF, a silver, or platinum, they're non-yielding assets. So, in a higher interest rate environment, making an investment case for a non-yielding asset just has to be that bit more robust than it would be in a low interest rate environment. So, for platinum, I mean, we think it's a very compelling investment case in terms of sequential deficits and how that's likely to feed through in terms of market pricing. But I think it's for a lot of institutional investors, they're being pushed by their CIOs to look for yielding assets, and so as a result, we're expecting some outflows from the ETFs for next year. Now that said, we'll be kind of working hard as the World Platinum Investment Council to try and get people to educate people on the deficits. And what we think is a compelling investment case for platinum, even if interest rates are higher for longer.
Right. And on that note, as we're wrapping up, are there any final highlights from the report or looking into 2024 that you would leave investors with?
I think the key thing really is that we've got two sequential deficits, and those deficits are coming from platinum's existing end users. Which are already pretty significantly important in terms of the environment and reducing harmful emissions. So platinum's ESG credentials are already extremely attractive. Then if you look longer term, you're investing in the current deficit, but longer term, you get the significant benefit from the growth in green hydrogen that comes through in time. So all in all, we think it's a unique metal. It's going to remain within the focus of the majority of investors. And we think that 2024 could be a pretty interesting year.
It does sound like it's shaping up to be pretty interesting. So I think that's a good place to wrap it up. Certainly, we'll be checking in with you next year to get an update on what's going on. Thank you so much for coming on right now to give us an overview of the market.
Well, thank you for having me on.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Edward Sterck with the World Platinum Investment Council. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.